It's doing big double-digit gains and it's not in technology. Now, this company I'm going to share with you today is doing profits, not just revenue. Because, when we've covered growth companies like C Limited, like CrowdStrike, we realize that many of them are not profitable. They're just growing revenue. But this company is growing profits. Now, take a look at this chart over here. What do you see? Booming tin prices, correct? Tin is not the only commodity that's booming in terms of prices. You can check. Coal prices have been skyrocketing. Palm oil prices have been skyrocketing. And it seems like it's across the board for many commodities. And today, this company is a champion in tin mining. This company I'm sharing with you is actually MSC, Malaysian Smelting Corporation Berhad. A Malaysian company. How interesting can that be, right? Now, MSC is actually listed on KLSE. But if you want to buy it from Singapore, you can actually look for ticker NPW. There's a dual listing for this company. And if you see the chart over here, realize that the Singapore price is slightly lagging that of the Malaysian price, correct? Which means possibly opportunity. But the bigger opportunity that I'll be sharing with you is the earnings growth that Malaysian Smelting Corporation Berhad is delivering. And in terms of price earnings expansion, I'm actually seeing it right now already. Today, in this video, I'll be sharing with you an overview on what it actually does. I'll explain to you why the earnings are looking better than in previous years and what you need to look out for. So if this topic interests you, continue watching on. Hi guys, welcome back. Now, I actually struggled hard with this pick because, Malaysia Smelting Corporation Berhad is not off the top of mind for anybody. It's a very small search volume company. And it's much better to do Alibaba or Tesla, where there is a lot more popularity, a lot more search volume. But in the case of doing my own research, I think it is very interesting, this finding that I have. So might as well, don't hold back, share with you, and you decide for yourself. My track record, if you see, Baustit, fairly decent only. Propnex, much better. So there's also varying degree of success. Don't follow things blindly. But follow this story because I have something interesting prepared for you. And let's touch on the overview of things. Malaysia Smelting Corporation Berhad only has one business, which is in tin smelting. And what exactly is tin smelting? It's actually production of various grades of tins, and it's actually an industrial processing method. So they actually have a new port now in Port Klang, which is now the HQ. And if you read in annual reports as well as analyst reports, you realize that the Penang plant is gradually being shut down already. This new plant that they have in Port Klang, which I have an image for you to see over here in terms of location, it's way closer to the trade hub and is using superior technology. And this forecasts it to be a much lower cost producer, and that naturally improves the margins of things. But the big kicker, which I'd like to share with you, is this over here. This logic of it being eco-friendly, because it's using less electricity than before, there's a chance that this company could be propelled to within the search of ESG funds. ESG has been a big theme in 2020, 2021. And ESG is actually environmental, social, and corporate governance. It's actually an area whereby we all, as investors, look for companies that are socially responsible. And there are not many names that score highly. So if MSC can qualify to be inside the list, you should expect demand to search in. But that's still a long shot. And the second part of their business is actually in tin mining in Malaysia itself. But they do not sell the tin that they produce. They only sell the end product, which means the tin mining arm will only sell to the smelting arm. That's only internal sales. Because my guess is they only want to sell the higher margin end product, which is smart. And in the next section, I'll share with you why the earnings could be growing big time. Now, before you get there, let me invite you to smash the like button because it's taken a few hours to prepare this presentation for you, and subscribe, especially if you want to find out more on locally listed investment ideas. Next few weeks, I'll be covering more on retirement planning, so if that's a topic that interests you also, remember to smash or subscribe. Now, why did I take interest in tin? Let me give you a first big reason, and it can be explained in this chart over here. Assuming this is true, because I'm not a scientist, I can't verify it. Apparently, tin is one of the most important metals for new technology. It's involved in electric vehicles, it's involved in robotics, it's involved in clean energy, I guess through batteries, and last but not least, it's also important in the advanced computing sector. That's perhaps semiconductor sector. And if that's true, when you buy into tin, you're actually involved into the future technology space. Then the next question is Malaysia Smelting Corporation Berhad just a small player that does not benefit too much or not? That's a natural question, and I have for you this answer. It's actually the number 3 biggest in the world in terms of producing tin. So pretty spectacular, right? The number one is Yunnan Tin. I've actually done some homework for you. If you look at the price chart between Yunnan Tin Company Limited, PT Timah, as well as Malaysia Smelting, you realize that they are all unanimous in the upward trend, which goes to show that the sector is getting more and more favored. And if we drew down to what Yunnan Tin Company is actually valued right now, its price earnings ratio is around 21 times, and the book value of Yunnan Tin is about 2.3 times. Currently at this point of filming where MSC is 80 cents, their price to book is also around 2.3 times. So the quick conclusion is Malaysian Smelting Corporation Berhad is not expensive versus its peers. The second reason as to why earnings could be growing big time is that now seems to be a wave for commodities. Let me show you back again the tin prices. That is the 1 year chart, correct? But if we look back in terms of a longer time period chart to see the cycles for tin prices itself, you realize that tin prices climbed tremendously from 2004 to 2008 and then again in 2009 to 2011. The big question is this the start of a commodities super cycle again? Or are we in the middle of things? In my opinion, we are not likely at the end of the cycle. It has only started about a year plus, with so much money printing, with so much inflation. And I have also a surprising finding when I superimpose MSC's chart with the tin prices. What do you realize? The correlation is strong, correct? And I've actually inputted the arrows to show you that when tin prices go up, MSC's pricing tends to go up. UBK has actually done some sensitivity analysis. They forecast that per 1,000 gain in terms of the tin price itself, it would translate to 10% more profits. And I've actually validated in terms of the margin, what are they delivering right now to shareholders. If you look at this, you realize that MSC actually recorded its best ever margin in first quarter 2021, clocking in more than 8%. But the curious question is, why did second quarter look so bad, correct? Why did it all drop? And the simple reason is because Malaysia went into lockdowns again, MCOs. From Singapore side, when we look over, we keep seeing them do this MCO, but they're doing shutdowns, preventing people from traveling interstate and closing a lot of factories in the process. But now Malaysia is looking to open up. Vaccination rates are higher than before. And personally, I believe that there are not too many MCOs looking ahead in the future already. So that means if third quarter and fourth quarter see no disruption to factory production, this net margin could increase and the net profits per quarter could see new record highs. In any case, it's already validated by how Yunnan has performed. Yunnan Tin Company has actually done a third quarter 249.3% year-on-year growth. So if that also translates to MSC's performance, I do believe that there'll be good performances in the coming quarters ahead. If you have been following the channel, you kind of know I like to give pros and cons for you to make your own decision. And the main con to understand is that commodities are highly cyclical. We shouldn't be naive and expect tin prices to forever stay high. So there is a period whereby you need to know when to sell also, and that cannot be explained in this video. The only thing I can go through with you is what has happened in the previous years. If you see in this chart, you realize that performance has actually been quite bad for MSC, correct? In the previous years leading to this moment. It's seen declining earnings per share, declining revenue also from its smelting business. And when a down cycle hits, it could really cause the share price to turn bearish. So be very careful. When you buy a cyclical stock, have in mind what is your exit strategy. So hopefully I've intrigued you with this small company. And let's check it out maybe 1 year down the road to see how performances have been. Let me end off things by giving you a further bonus. That is, you can actually invest into MSC via Straits Trading. Straits Trading is listed in Singapore also. It's slightly bigger in cap. And the main part is Straits Trading owns 51+% of MSC. If you look at this chart over here, you realize that the correlation in terms of share price between Straits Trading and MSC is very strong. And Chairman Ms. Chugate Kim has actually mentioned before that she is actually open to sell MSC at some point in future. So if one day there's a rival that steps in and tries to buy up MSC, it wouldn't be beyond my wildest expectations to see her wrestle out an M&A deal and sell MSC at a good valuation for shareholders. In any case, Straits Trading used to own ARA Asset Management, which was recently sold to ESR Cayman. ESR Cayman is a hybrid REIM, a real estate investment manager. And if your question is what exactly is a real estate investment manager, check out this previous video I've done. CapitaLand themselves are doing this REIM model, and they are a direct competitor of ESR Cayman. So hopefully you've benefited from the sharing, and with that I'll sign off and see you in that tutorial too. Take care and goodbye.